Well, it looks like we're getting ready to have another challenge. They just don't seem to go away, do they? I'm Bill Cherry, and I've been involved in finance one way or the other for my entire life, and I'm an old dude. And I have learned pretty much that what works and what doesn't work. The Federal Reserve is taking the action that Mr. Powell, the chairman, wants them to take. And so he's going to start raising the interest rate. And his objective is to cut back on the number of people who can get jobs. And if you cut back on those people, they won't be able to buy stuff. And they won't be able to pay their rent. And they won't be able to buy houses and cars. I just am totally flabbergasted that you put the problem, which I'm not even sure is a problem at this point. He's causing the problem of a recession on the hips of one segment of people. And so anyway, that's just what I think. And it's not going to be good unless those guys that are the chairman of those banks get on to him and tell him, you're not doing that. They're not having it. But I want to tell you about what's going to happen on all these houses that you people have bought, including me. I'm a you people, you know. We got really good interest rates. And so as a result of the new interest rates and refinancing and all that sort of thing, we were able to pay more for the house than we would have had they been at a higher rate. Is that right or wrong? You really buy a house or a car or anything big based on the amount that the payment is going to be, the monthly payment, and how long it's going to take you to pay for it. So if the money is flowing good and the interest rate is low, you can put down a good down payment and you can go on and buy with the fanciest house that you want. And there you are. So the guy selling the house makes money. The real estate person makes money. The bank makes money. The title company makes money. The contractor that's fixing the house makes money. Everybody's making money. When you start raising the interest rate, you cut back on the amount of money that's available for home loans, real estate loans, and you also make it where that the value of the house that you would like to buy is no longer available to you because the cost of interest on your loan will be greater than you can afford. Is that right? And so the guy trying to sell the house, who, remember, he paid a good price for that house, he's all of a sudden going to take a loss. A long time ago, when I was a wee duck, about that tall, I worked in banks and I worked in a savings and loans, and I made loans. That's what I did. I made loans. And I know I've told you these stories before, but this is one I want you to pay attention to. Loans that were made to the soldiers when they came home from the war, they made them at a much lower interest rate than we were making to regular people. And so what happened was that when they raised the interest rate on new money, if they caused you to have to pay off that loan, as part of the deal, then you couldn't pay as much for the house as you could otherwise. And on top of that, the guy that was trying to sell you the house couldn't sell you the house because you would pay off the loan. So they came up with a deal called a wraparound mortgage. A wraparound mortgage. What it amounted to was you could assume the balance on that guy's loan. So let's assume he had a 3% loan. And the current rate for mortgage money was, say, 6%. Then if the house was costing you $100,000 and that guy had a $50,000 left on his mortgage, and you had to pay 6% on another $50,000. What happened is that they would just put the two together. So you assumed his loan, and the government agreed to allow the savings and loan to take a first lien because they're buying and repeating that loan. And that guy gets out, and you get to buy the house at a reasonable price, and it all goes down the road. There was a lot of loans made like that, and the market was able to hold it together. And we didn't end up with people taking big losses on their homes as a result of not being able to sell a house at a loan that was similar to the loan they had. So they're called wraparound mortgages. Wraparound mortgages. And they're not legal right now. And so what you need to do is you need to write your congressman and your senator and your president and Mr. Powell, of all people, and say, put the wraparound mortgages back in business so that the banks can continue to operate like they want to. People can stay even where they are and not take a loss, big losses as a result of not being able to sell their house. And we can move on down the road. And then when the markets get satisfied again and everybody's happy and things are going along like they should be, then you can remove the ability to have another wraparound mortgage. Real simple. What do you think? It worked really good before, and that's been, I don't know, 56, 78, about 50 years, I guess, since we had wraparound mortgages. I love this kind of stuff, don't you? Trying to figure out how you can outsmart the guy that thinks he's smart. Maybe you're doing that with me. That's all right, too. I'd like to hear what you got to say if you think you're smarter on something than I am, which I don't doubt. I mean, you very well could be. Then I'd like to hear your answer. Nice talking to you. Thanks for being with us. We'll see you next time, okay? Bye-bye.